Thank you all for joining today. What we're going to be covering today is 7 must-knows for a successful GASB 101 implementation. Through this webinar, we're going to be sharing our 7 insights from the early work that we've been performing on assisting our clients with implementation. And we know you all are, if you're a June 30, probably working through implementation right now. If you're a 930 government, you may have just gotten through your fiscal year 24 audit and be starting to think about implementation to get ready for your next 9/30/2025 fiscal year end. So hopefully we're catching you at a good time, providing you some good insight and content here. One thing I want to note is that you will actually see 5 polling questions through this webinar, but you still only have to answer 3 in order to get your credit. If you all do not know me, my name is Danny Martinez. I'm a partner here at Cherry Becker, and I lead our government and public sector accounting advisory group. So it is a group separate and apart from the audit team that provides assistance with things such as drafting ACFRs, closing the books, getting caught up on your reconciliations. And of course, one of the things that's core at what we do is implementation of new governmental accounting standards, which is what we're working on a lot now with our clients with GASB 101. Scott, would you like to introduce yourself?
Yeah, thank you, Danny. My name is Scott Anderson. I've been with the firm for about 20 years. My current role is I'm the technical lead for our government audit practice. And then because I spent a couple of years at GASB, Danny always ropes me into stuff like this. So I help out with some of his advisory stuff and doing some of our thought leadership efforts.
Thank you, sir. So you all are probably used to us presenting by now. You know, we try to jam it packed with as much information as we can to get you what you need to know here in this 50-minute window. So our agenda for today, we're going to be working through each of the 7 must-knows for GASB 101 implementation. Some of the topics that we're going to be covering today is what's changing. So what is changing from the old guidance to what you're going to have to be implementing this year? We're going to focus in, of course, on both recognition and measurement. We'll touch on some subjective determinations. I see that some of you all are already utilizing the Q&A function. Please continue to do so. But there are definitely some subjective determinations because GASB 101 is a principles-based approach to recording your liability for compensated absences. So we'll talk a little bit about those, how you can think about those for your particular government. We'll talk about being ready for your external audit. So whenever you roll around to your 6/30/25, your 9/30/25 year-end government or audit, excuse me, being ready for that external audit. And lastly, you know us by now, we like to provide you all with tools, resources, all the things that you might need to make your implementation a much smoother process. And we will be answering questions. We are saving some time at the end. We anticipate to receive quite a bit of questions, so please send them in as you have them through the Q&A function. We will use our polling question time to start answering some of those questions as well. So before we get into that, as you all know, Scott and I have been presenting webinars together for the last 3 years, really working our hardest to put out the best in governmental accounting content to you all that is actionable, that's valuable to you within your governments. And if you all don't mind, it's going to take a quick minute just to show appreciation for you all and for your continued support of these webinars and Scott and I to be able to provide this information to you all. So for today's webinar, we hit a really big milestone. All 50 states and DC are represented in today's webinar. So we have someone from every single state that is registered and joining in. So thank you all so very much. It still blows my mind that there's someone sitting there 7:30 a.m. drinking their coffee in Hawaii, watching us talk about GASB 101. But again, very much appreciative of your support. As you can see, I made this right before the webinar with my beautiful graphic design skills. But as you all know, me and Scott joke about it, but our goal, of course, is world domination of governmental accounting content. And who better to represent the domination of content than these two guys? So as you can see, And I love that little animation that it drops in. But again, thank you all so much. We just wanted to just jump in real quick and just say thank you for your continued support. And hopefully this next 50 minutes is as insightful as the rest of our webinars have been. With that, I'm hoping that Scott is adequately embarrassed and ashamed of me putting that together. I didn't show it to him beforehand. So with that, I'm going to turn it over to Scott to go over our first polling question.
The world domination thing is pretty ambitious considering most of the world follows GASB instead of GASB, but I'll stop being nerdy about it. All right, so first polling question. We're going to start with a couple polling questions, and we like to use our polling questions to get to know who's in our audience and what you guys are dealing with. So first polling question is, what is your fiscal year? Are you December 31st, June 30th, September 30, or other? And maybe we can get some of our December 31st folks to help us explain some of these things because you are neck deep in it at the moment. All right, did that poll close already? And oh, it has closed, and it looks like we've got a lot from June 30th, and some from June 30, and then 35 people from December 31st. So welcome everybody. I wonder who the other are. Now that's interesting. And let's go ahead and go to the next poll then, which is polling question 2. Where are you in the implementation process? Phase 1, and these phases aren't in the standard. These are our phases. This is what we use when we implement a standard. Phase 1, haven't started, just started to learn about it. Phase 2, evaluating our compensated absences. Phase 3, documenting new policies and making subjective determinations. Phase 4, creating new calculation template and or preparing journal entries. Or are you completely done? I do know that some of our audit clients, early implemented. So there should be some that are done and are just attending this webinar for CPE purposes, which is okay. We're okay with that too. So give it a couple more seconds. And the results, we do have about 40 people that are done. I'm glad that exceeds the December 31st numbers. Hopefully, most of y'all are done with it. But then there are some who are still learning. That's pretty even distribution between those who are still learning about it and those who are evaluating their compensated absences. So this is a great time to be listening to our webinar as we talk about things that you should be thinking about during your implementation.
And just to chime in here to give you an idea of what we're seeing on the advisory side, the June 30s are probably somewhere, if you want to be on track with all of your peers in June 30s, they're somewhere around phase 2/3. They're accumulating their compensated absences. They're starting to make those determinations about more likely than not and all those types of things. The September 30 governments, which we have quite a bit of as well, somewhere around phase 1 and phase 2. So doing these types of trainings and starting to take a look at your compensated absences and what you all should be starting to think about with liability recognition. So in case you're curious about where you are nationwide based off of what we're seeing, that's about where you should be today.
And no worries if you missed that first poll. We have 5 polls. You only need 3 to get credit. So if you missed that first one, you're still in pretty good shape. All right, so I'm going to start us off with talking about the first of our 7 must-knows about what you should know about implementing GASB 101. And I realized for this first one, I have a case that I need to build. Why is the GASB making this change? The case being, why is that important to know when implementing GASB 101? For me, go back. I'm not there yet. For me, I feel that when you understand why GASB is doing what they are doing, it makes it a lot easier not only to understand the pronouncements, but also to remember the provisions or the requirements, and also to know how to apply them in real life. And so, contrary to some criticisms, the GASB does not just sit in a room and try to figure out ways to make your life harder. A lot of these topics rise to their technical agenda through recommendations from outside sources. I currently sit on the experts panel for the AICPA, and the GASB reaches out to us and asks us to help prioritize their list of projects or potential projects. And so they get a lot of outreach. And once it rises to that list, to the top of that list, then they do what we call a reexamination project. So now you can go to the next slide. And one reason why GASB 16 ended up on this reexamination project list is it's pretty old. It was, as my kids would say, this happened back in the 1900s. There's a lot of fun things that happened the year that this was issued. And so it became time for the GASB to take a look at whether or not that standard was effective. And what they found was that it did cover a lot of what was out there, but as the decades passed, the employee benefits have evolved, and no longer could everything be fit within the GASB 16 box. And so it was necessary to expand that box just a little bit. So the old definition of a compensated absence in GASB 16, an absence for which employees will be paid. And hard to tell what came first, that definition or the term compensated absence, but the new definition from 101 is an acknowledgement that it's not necessarily that way. A compensated absence does not always result in an absence. And this payment, it seems to imply paid in cash, doesn't actually get paid in cash. It includes cash payments when time off is used, or cash payments when an employee retires, or in some cases, a non-cash settlement, such as a conversion to a defined benefit post-employment benefits plan. Besides that, if you want to go to the next slide, Danny, back when GASB Statement 16 was issued, the GASB's conceptual framework was fairly new, was still maturing, and they only had one concept statement. Concept statement 1, which by the way is a must read. I'll recommend reading that one, but it did not directly address liabilities for compensated absences. Concept statement 4 was issued in 2007, and among other things, it defines all of the financial statement elements. And so it provides this definition of a liability, which is a present obligation to sacrifice resources that the government has little or no discretion to avoid. And so with that definition, the GASB needed to reevaluate whether or not what they had in place was capturing liabilities related to compensated absences. And that will get us to the second of the must-knows, which is your liability is likely going to change for leave that you don't pay out. So think about that definition of a liability: present obligation to sacrifice resources that a government has little or no discretion to avoid. And the GASB's task was to come up with criteria that was going to sniff out what would result in a liability. So if you want to go to the next slide, Danny mentioned earlier, it is a principles-based approach. These were the three criteria that they put into effect with 101. The first is that the compensated absence must be part of this employee-employer exchange. Meaning part of services that were rendered by the employee. The second one is that it accumulates, meaning it carries over to the next year. Understanding that there are some nuances with employee policies. Sometimes there's only a certain amount rolls forward, or some have a use it or lose it policy, but accumulates and carries over to the next year, however long, is one of the criteria. And then the third one, which is the one where probably the most fuss has been made, more likely than not to be used for time off or otherwise paid out in cash or settled through non-cash means. So what we get from that is that vesting, which was a requirement or which was a recognition criterion in the old guidance, is no longer a recognition criterion in the new. And so the board was asked specifically about how vesting would not be part of this new definition of a liability. And I'd like to just reference something that the basis for conclusion says about this. It says GASB believes that non-vesting leave that accumulates to another period for future use presents a present obligation for the government. A government still has an obligation for non-vesting leave, even though they are only obligated to the extent that the employee uses the leave. And so that's where you get this more likely than not criteria. So as an example, According to the City of Springfield's policy, employees can accumulate an unlimited amount of sick leave. However, because the accumulated amount does not get paid out upon retirement, the city does not accrue the liability for sick leave when applying GASB 16. This is what we're seeing a lot. A lot of governments don't accrue sick leave or haven't accrued it because it doesn't get paid out. But when applying GASB 101, whether or not leave gets paid out is only one consideration. The city must also determine the likelihood or the amount of the leave that will be used during employment. So a liability should be recognized for the amount of leave that has a greater than 50% likelihood of being used. The other part that's covered in 101 is measurement. The good news is this is almost exactly the same as 16. So the hard part will be determining the number of hours that need to be used in the calculation. But once you have the number of hours, the calculation is basically the same. In fact, this phraseology, directly and incrementally associated, is exactly used in GASB 16. The one thing that I will point out is GASB 16 doesn't really address what to do with a leave pool. So when you have a pool of leave hours that aren't directly associated with an individual employee, how do you come up with that calculation? And GASB 101 provides that clarification, which is you would use an estimated rate that is representative of the eligible population. All right, and then let's go to polling question number 3. Which of these situations most accurately describes your leave type and payout? You pay out both vacation and sick. We do see that from time to time. Pay out vacation but not sick. Pay out a portion of sick and or vacation, or pay out nothing. We'll just give you a couple minutes to answer that. While we're doing that, Danny, do we have any questions that we can answer?
Let me see. Oh, we have one question, and that we'll get into a little bit later about understanding how LIFO FIFO fits into liability calculation. And then there's also questions about approaches to take in terms of, do I want to use a dollars paid approach or days used approach? Both of those, you're referencing the GFOA templates that have been prepared. Those are examples of ways to calculate the liability. We at Cherry Becker are also coming up with different approaches outside of those that would also be reasonable in terms of calculating that more likely than not percentage. So really the driver there of how you choose which one you would like to use, one of the main things that we look at, and we'll talk about in a little bit, is the availability of information. What type of information do you have that you can analyze? Because when you're analyzing whether leave is more likely than not to be used, you're having to look at historical information and looking at your policy and determining what information that you do have to then base that on. So it really is government dependent. I'm sorry, you might not want to hear that. And then lastly, with that question, the employee count is about 1,700. What would be a good sample size? So we get this question as well. I'm coming up with this calculation of more likely than not. How should I analyze it? And so depending on the data, we're seeing people use entire populations or using a sample of the population. One of the things that gave some people some heartburn with the GFOA's version of the calculation is that the sample size was small. I believe it was like 5 or 10 employees that you were then attributing towards the entire population. There's nothing specified within GASB 101 in terms of how you come up with your approach. I'll talk about ways that you can think about it here when I present my sections. But it really, you're working with what's reasonable, what information do you have, getting auditor buy-in early. Those are the types of things that you're going to want to focus on when you're deciding which route that you're going to take. Scott, I missed the polling question results. Did you want to share them?
Yeah, it was about what I expected. There are some who pay out both. A lot of governments pay out just vacation but not sick, and then there's a lot of who do a little bit of both. And actually 2% only don't pay out anything, which I guess those are the use it or lose it folks. So
Right, thank you. And so those of you all that pay everything out 100% of the leave, 100% of the time, you're going to have the easiest time with this pronouncement because you're already accruing everything, right? So there's not going to be as much work for you all versus those that, only paid out one or another or paid out a certain portion. There's a little bit more work for those governments. So I'll go ahead and take the next must know, and you must know about your population and materiality. So I was fortunate enough to present at the NASAC, so the National Association of State Comptrollers Conference last month on GASB 101. A lot of bigwigs in the room, right? I had Alan and Joel from GASB. David Bean was there. Robert from NASAC was there. So needless to say, a little bit nerve-wracking to talking about GASB 101 and what you should do in front of that audience. But I think the most interesting thing that I took away from that conference and from the discussions that happened before and after was this idea that materiality matters. And just continuing, we continue to impress it on our advisory clients, continue to impress it as GASB does as well with this materiality box. And so what I want you to keep in mind is remember what balance that you're talking about. We're talking about your accrued compensated absence liability balance. And so for those of you all, it probably rolls up into other long-term liabilities, or maybe sometimes it has its own line. But when we do our trainings with our advisory clients, we do a tailored training up front. And one of the first things we show them is, okay, everyone, this is the balance that we're talking about. And so the change in that balance based off of the new guidance is the changing in recognizing that liability itself. And so why that matters is when you're making these decisions, like mentioned in the chat about, should I sample? How precise do I need to be? How can I come up with this more likely than not calculation? What we encourage people to do is look at if you were to be really extreme one way and say all of it was more likely than not to be used, really extreme the other way and say like none of it is more likely than not to be used, and take a look at the change that would make to your liability. So take a look at last year's balance. What would that do to my liability balance? And get a sense of how material the range of liability could be, because that will then help inform you on how precise do I need to be with my more likely than not calculation. Some people talk about, do I need to bifurcate it by different departments? Do I need to sample my or treat my older employees in a different bucket than my younger employees? How precise do I need to be? I think thinking about this materiality concept is really important as you're coming up with that. The other thing that was shared at that conference was GASB puts out a level of effort for implementation for each of their pronouncements. It's low, medium, or high. We in our advisory group, if it's medium or high, we build all these things that you're seeing here today to help you all with it. And so what GASB said when they were talking about how they come up with that is they are factoring in the cost benefit utilizing their concept of materiality, of what users would care about. And so when you all, as state and local governments, go beyond that and make it more precise and get it down to to a very narrow dollar amount, then you are likely putting in more cost than the GASB is thinking about when they're when they're thinking about and explaining the cost benefit of implementation. So I thought that was a really interesting point that was shared. And so where materiality may come into play for the standard, I have three ways for you here. One, the types of leave that will require recognition of a liability. If you all attended one of our previous trainings on GASB 101, you'll know that we have this thing called a GASB 101 buckets checklist. This is a list of 27 different types of compensated absences that governments may offer to their employees. We put that out just to kind of show that, yes, there is a comprehensive list. There's a lot of types since 1992 of leave that and of compensated absences that governments are offering. But in reality, the number and the types of leave that are actually going to require measurement of a liability, once all is said and done, is probably going to be a lot smaller than that. Touched on the second bullet point already, but the precision of your estimate for your more likely than not to be used. You'll want to factor in materiality there as well. You also, with that calculation, think about how hard it's going to be from year to year. So you don't want to create something in fiscal year 25 that is going to be very difficult to replicate in future years. So is there something that you can do with your more likely than not estimate that is materially accurate, it has reasonable assumptions built into it, but that is not going to be a arduous task year after year. And lastly, with materiality, if you have a restatement for the change in accounting principle. So if you're having to restate because of this pronouncement, you'll be looking at the materiality, working with your auditors on that to determine if that is necessary. All right, so number 4 on these 7 must-knows is your policy is your guide, and it is going to be missing things. I mentioned earlier the GASB level of effort of implementation and how this one was ranked as a medium level of implementation. Well, GASB's 87 and 96, which you all recall that you just implemented in previous years, those are ranked as high, right? So we're moving down to more of a medium level. The other one that you're going to be dealing with that's coming out soon that will be a medium level is GASB 103, which is a financial reporting model improvements. But that being said, the one area where there might be more challenge or more difficulty with implementation with 101 is that there are no two governments that have this same type of fact patterning in terms of how they pay out, what leaves they offer, all those types of things. So for GASB 87 and 96, we would take the leave contract, we'd take the leasing contracts or the speed of contracts. I'm gonna pull out a payment amount. I'm gonna pull out a term. I'm gonna figure out if you're reasonably certain that you're gonna extend. I'm gonna key in an incremental borrowing rate, put that into a software, click a button, entries. When we worked on the implementation side for governments, we were able to streamline and almost assembly line the approach from government to government because the fact patterns were very similar. Within here, the factors are very different when we go government to government because these are things that you all are providing as benefits as part of your total compensated absence compensation package to your employees. So some factors that are different from each government, leave types that are paid out. We just had that slide in there where it showed that some pay out everything, some pay out a portion. Caps on accumulation. Some entities can carry over only at 240 hours. Some entities they have 10,000 hour sick leave balances for those employees that have been there for 30 years. Tiered payout and earning. We're seeing all types of you will be paid out at 50%. Oh, but by the way, employees that are here more than 6 years, they get paid out at 75%. Hey, but if you're there at 10 years, you can get paid out all of it. And so as we're trying to build up the calculation for the new accrued compensated absence liability, all of these things are being factored in. Leave conversion as well. We're seeing some leave that converts to your retirement plan. We're seeing some leave where at the end of the year, half of your sick leave goes to PTO or vacation, and then that would get paid out, but the other half of your leave disappears. So there's nuances, and I'm sure all of you all are listening are nodding your head to the portions that apply to you all as you've been going through this and trying to figure out, well, why can't I just use GFOA's template and plug it in to what we're doing? And it's really because of this factor here that each government and your policy and what you're doing is a little bit different. And so you kind of got to work with what you have to build out what your liability is going to be. So some things that your policy is likely to be missing, flows assumption. So the flows assumption, this idea of first in, first out, or last in, first out, where are you all most used to hearing that in inventory, right? When you have the first thing that you bought is the first thing that goes out when it's sold, or the last thing that we bought is the last thing we bought sold. So it's very weird to try to apply the concept of a flows assumption to your leave balances. And so this is where we get into, we could have 30-minute discussions just on this, but just to give you an idea of what is this guy talking about, you all have leave balances, your vacation leave balances, and you accrue, say, 100 hours every year. So at the end of year one, you had 80 hours left. At the end of year two, you had 160 hours left. So you're using some, you're accruing them, you're growing that balance or using that balance depending on how much you use. What this flows assumption is asking is the amount of leave that you all use, is it first coming out of the old stuff that you earned back when you were first employed and first started accruing leave, or is it the leave that is accumulating in the current year, meaning in fiscal year 25, I'm using my fiscal year 25 earning first, then I'm going backwards to 24 if I need it, then I'm going backwards to 23. Was not a thing that many governments thought about, cared about, right? An hour was an hour. But in looking at this in GASB 101, GASB does not prescribe which way that you must use it, but what you do need to do is document within your policy which approach that you are taking. One of the things they like to talk about with our clients in respect to this is there something, even if it wasn't written in your policy, that you're implicitly doing? And one example of that is every year currently you're booking you're booking a current year liability for your accrued compensated absences. So you're booking a portion of that. If you are booking a portion of that that is similar to the amount that you are using within a current year, that makes it seem like your current policy is that all of that leave that is going to be taken in the next year is part of that balance that you had at year end, which sounds a little bit more like leave that is first in, first out. There are governments that explicitly say within their policy that they do use last in, first out. In talking to just to give you a view from the field and talking to our advisory clients, more, if not most, are going with the FIFO approach. It appears that there's more documentation if you're going to be following a LIFO approach to truly prove that it is a LIFO approach. The last thing that I'll touch on that here is that just because you have a sick balance, say some of you all have very generous sick policies that go from 100 hours, say you're given 300 hours a year in sick leave. You never use that much sick leave each year, so your balance is growing year after year after year. You never use as much as you earn during a specific fiscal year, unless you run into some type of health condition. That does not mean that you are automatically last in, first out in terms of recognizing your liability. In fact, it's a completely separate determination and decision from your flows assumption, whether it's first in, first out, or last in, first out. I'm sure a lot of you all still have some questions related to this because it's such a funky concept to apply in this setting, and this would be something when we could sit down later and have further discussions that we'd be happy to explain and kind of share what we're seeing.
And Danny, if I could, can I add a auditor perspective on this? As you mentioned, LIFO, FIFO, it's not prescribed. There's an option there. But as the auditor, we just like to see that there's a thought process behind it, that the goal is not just to use the one that derives a lower liability. And so when we look at GASB 100, where it talks about changing your accounting principle, and you must justify it on the basis of the qualitative characteristics of financial reporting, that's a good framework for deciding which accounting policy you have in any case, which accounting policy is going to improve the qualitative characteristics of financial reporting, which is consistency, comparability, relevance, reliability, timeliness, understandability. And that's all we look for as the auditor, is that there is a justification, there's a thought behind it, that next year you're not going to determine that, well, maybe FIFO would have been better, and then make that change. We just like to see that there's a thought behind it.
Thank you, sir. Other things in your policy, is likely to be missing. What we're finding in some policies and procedures is there's not explicit accumulation and termination assumptions, meaning how much do you all accumulate? What happens when you terminate? Sometimes it's one of those things that's known within a government, but maybe not accurate, like fully written down. So we're giving some recommendations to update your policies to be a little bit more explicit there. How to determine if leave is more likely than not to be paid out is definitely going to be missing because no one cared about that concept prior to GASB 101. And another one is record retention for leave usage to assist with historical trend analysis. There are some governments that maybe are having a harder time implementing GASB 101 because they went through a recent ERP conversion and they don't have this historical usage data that we're supposed to utilize. Or maybe they're not retaining it for as long of a period. What we would recommend in thinking about with updating the policies is the inputs that you're using to figure out that more likely than not calculation. Make sure you have a record retention policy for that type of information so you have it on hand kind of on a rolling basis. I touched on one of the things that you'd be missing would be that more likely than not determination. I've shared on this a little bit, but unfortunately, there's not a one-size-fits-all approach to doing this due to the unique compensated absence benefits. So what you all are giving to your employees and the payout and the accumulation and all of those things, but also the availability of historical usage information. Some entities have the information to bifurcate by department, and it makes a lot of sense for them based off of how they're currently doing their journal entries. Some entities, all they have it is just one big pool, and they're not really able to break it out into as much detail. So that is another factor in determining how you're going to come up with this more likely than not calculation. Some factors to consider if they're appropriate for your government. One of the things that we've seen is a historical usage percentage. So of all the leave that is accumulated during the year, how much of that is actually being utilized by year? And then applying that balance times the total balance at year end to come up with how much of that leave might potentially be used. Another way that we've seen done is the average tenure of the employee times the hours used per year. So how long are employees staying there times how many hours are they using per year. Other things to consider, like I mentioned, sampling of employees. Touched on the GFOA example where they pull either 5 or 10 employees and apply it across a very large population. Do you need to bifurcate it by departments? Do you have some departments that have union deals or some departments that you know utilize a lot more leave or have a different payout structure? Or are you going to use your entire population? So those are things to think about in terms of your more likely than not calculation. We're not going to be presenting on here, this is how you should do it, because it could get misapplied if you don't have the appropriate information or if it doesn't meet your specific facts and circumstances. Polling question number 4, and I don't know if this is me or Scott, but how have you started working on your more likely than not to be used determination? Yep, we're done. Yes, we've started it. No, but we plan to do it soon. What are you talking about?
Oh, while we're waiting for that to come, this poll to happen, I'll note that there were a few questions coming in that are fairly nuanced. I started answering some of them, but may not be giving them adequate justice. So if I did that and you still have questions, please reach out to me offline. We're happy to go through some of your scenarios with you.
I'm normally not a facts and circumstances guy. I try to give you all answers on these presentations, but without knowing, like Scott said, because how nuanced they are, without knowing everything, it'd be a little bit challenging to answer you appropriately. So it looks like 11% of you all are done, 36% of you all are starting it, 42% are planning to soon, and be happy to talk to you all more about that. And then 69% you're hoping somebody else does it for you. Or sorry, 69 people are hoping that somebody else does it for you, which is not a bad approach if you can get away with it. Scott, turn it over to you.
Great, thank you. All right, so out of the 7 must-knows, this is number 5, which is that certain leave types are specifically identified for treatment, and this helps us out. So we've talked about how GASB 101 is a principles-based approach. But the board recognized that there are some leave types that, really, it's really not, the juice is not worth the squeeze, so to speak. You hear the GASB say that phrase all the time when they deliberate, that it was going to be a lot more effort for governments to figure out what the liability would be than it would be worth. And so they allow a few exceptions to the rules, so more of a rules-based approach. If you can go to the next slide, Danny. So here are the exceptions to the criteria. So if you have a leave type that where the leave is based off of a sporadic event, that affects just a relatively small proportion of employees, then you don't have to recognize that until that leave commences. Now, the guidance gives 3 specific items for this type of exception: parental leave, military leave, jury duty leave. Even if those instances end up not affecting just a small portion of your employees, those types of leave are always going to fall within this exception. There are other types of leave that you may evaluate and determine that it is sporadic and only affects a small portion of employees. You can apply this exception to that. You may think that sick leave would be applicable here because it's based on a sporadic event and just a small portion of employees are sick at any given time. However, 101 does specifically say that this exception does not apply to sick leave. Sick leave, you should still apply the 3 criteria for recognition. GASB 101 also highlights 2 other types of leave where you don't have to recognize it until it is used, which is unlimited leave and holiday leave. Just imagine for a moment trying to quantify what your liability would be for unlimited leave. It would be a disaster. And so the board decided that you don't have to do it with unlimited leave. Holiday leave, there's a challenge in understanding whether or not that is earned. If you hire somebody a day before Christmas and they get Christmas off, do they earn that? Some say yes, some say no. You don't even have to think about it. The board gives you an out. You don't have to recognize any of it until it's actually been used. And our 6th of the 7 must-knows, settlement through defined benefit post-employment benefit plans. So this actually threw me a little bit when I first read 101, because when you read the definition of a compensated absence, it actually calls out settlement through a defined post-employment benefit plan as an example of compensated absence. But it's not going to be included in your calculation. So next slide, not an exception, but also not included, because that does count as compensated absence for purposes of calculating your liability. You're not going to consider those payments or payouts to a defined benefit pension plan. The idea being that your pension or OPEB plans are already going to be taking this into account. There's probably going to be some overlap or some gap in what you would recognize for this versus what your pension or OPEB liability recognize, but the board decided that's not sufficiently material to worry about, so you don't have to. And so just to give you a few examples, paragraph 13 of 101 specifically says that when assessing likelihood, you would not include leave that is more likely than not to be settled through a conversion to the defined benefit plans. Paragraph 26 talks about how you would not include in your salary-related payments any payments that would go, the employer contributions to your plan, even if it is incrementally or directly associated. And then paragraph 27 talks about that it would not include in compensated absence liability the projected effects of an employer's defined benefit liability. So I get the question all the time, what about sick leave that doesn't get paid out but becomes service credit or informs the service credit upon retirement? Well, that is basically a conversion to a defined benefit pension plan that we would expect that to be included or contemplated in your liability. So you would not consider that to be paid out as part of your calculation.
Thank you, sir. Before I get into the 7th one, I have a couple questions that I'll go ahead and answer. One is if the sick leave, which will not be paid out upon termination, will not change the salary amounts paid in the future, is a liability still required? And so the answer to that is yes. So you have sick leave that is attributable to prior periods that they've earned it. and it accumulates to the future year, meaning they can carry it forward, as long as it's more likely than not to be used, which is that last portion, a liability would still be required. We understand that when they use it, it would likely be recorded as salary expense, but the GASBs, and going back to what Scott said in his first answer, the GASB is determined based off of the definition of liability that it should be a liability at year end. Let me see if where's the other one they wanted to answer? I have a question about the leave pool. The pay rate is not a problem, but how to calculate a number of hours is. So when you have leave pool, you're going to want to identify how many hours you have within that pool. How many hours have been taken out of an individual's leave and been donated to a pooled bucket of leave. Oftentimes we're seeing in governments that they have the option to give that leave to another individual, but there's no triggering mechanism until the employee that needs the leave actually asks for it. So it's actually still sitting in the individual's leave balance. So in those instances, you would treat it the same, treat it as it's still the individual's leave. But for those governments where you actually do put it in a bucket called sick leave pool or compensatory time pool, those would be the hours that you would take, and then you would then multiply those number of hours times the average rate of the people that can draw from that pool in order to calculate your liability for that. Number 7, documenting your thought process for audit is important. As a former auditor and Scott as a current auditor, we wanted to make sure that we provided kind of, as we're wrapping up here, is something that's very important that you must know is that to remember that old auditor adage where if it's not documented, it's not done. Over the next few months, you all on this call, as well as governments across the country, are going to be spending significant time and effort to successfully implement GASB 101. Making sure that you document the process will help you in a few ways. It'll help you to take credit for the work you've already put in, help you to explain things to your auditors, and it'll also help you to make it easier to follow in future years. With something that is changing, maybe not significantly in the terms of the liability balance, but significantly in terms of how you're thinking about that liability, and especially you're making decisions, you're making subjective determinations, right? You're creating an estimate of the amount of leave that's more likely than not to be used. You want to get that documented, get that put in policy, get that put into an implementation memo. This is also one that you probably in your entrance conferences that you're going to be having with your auditors, that you talk about the approach that you've taken and get their buy-off on reasonableness up front. And then the last thing about for future years, whether we like it or not, there's a lot of turnover within state and local governments, as well as shifting of positions. So the person that's in charge of implementation this year may not be there next year. So making it easier to follow in future years is something we highly recommend. One of the things that we do is we record a video at the end, reminding our future selves of what we did and what we did to follow the 4-step process that we go through. So then you can pull it up in June of next year, if you're a junior end, and be like, oh yeah, that's what we did. That's how I need to follow it. And creating those standard operating procedures. A successful implementation memo to help make the audit a little bit more seamless would include these items. And these are the items that we include in our implementation memo. Who the implementation team was, so who was responsible on the client side for implementation and their roles. What you did for your completeness search process and the results. I mentioned earlier you have we had 27 leave types that we found. Which one of those are applicable to your government? And which of those, that subset, say there's 10 of them that you offer, 15 that you offer, which of those meet the criteria in paragraph 9 of attributable, accumulates, and is more likely than not to be used or paid? So getting that all documented, that shows your auditor that we started with everything. These are the ones that matter. I mentioned the leave types recognition already. Subjective determinations made. So how you came up with your more likely than not calculation is very important. In the critical assumptions around your new leave calculation and template, why is this reasonable? Why is this allowed under GASB 101? I also want to document any updates that you made to your policies and procedures, right? As your auditors go through the walkthroughs in the current year in terms of your significant transaction cycles, they'll want to know what did you change to your policies and procedures related to GASB 101, and also including any future year plan. How are you going to make sure that whatever estimate that you applied, whatever percentage you applied of more likely than not to be used, how are you going to make sure in the next year that it is still a reasonable estimate? And so as we close here, the bonus must know. We've built all of this for your government already. So as you all know, with our advisory group, one of the main things that we're doing, we have a core group within our team that all they're doing right now is GASB 101 implementations. So first of all, complimentary material that you can find either on the Cherry Becker website. You can reach out to Scott and I, or whoever reaches out to you after the webinar, and to ask for, this webinar, you have that buckets checklist. So the GASB 101 buckets checklist that lists all the types of leave. If you want to listen to us, I host a podcast, and we did 4 episodes on each phase of GASB 101 implementation. So you'll get about a 10 to 15 minute podcast. Scott was on 2 of them. Bailey Steinley and Tatiana Britton from our team were on the other 2 podcasts, and breaking down a little bit more specifically each portion of implementation, as well as I think Scott wrote a GASB 101 article that is on our website. In terms of advisory material, these are available both to audit clients and non-audit clients in terms of things that we do to assist. We do that tailored GASB 101 implementation team training. So that is where we pull out your policies, your balance, and we talk through and make sure everyone's on the same page with implementation. We have a completeness summary tool so you can summarize all of your GASB 101 leave types. We give you ideas for example additions to policy and procedures and recommendations. The comprehensive implementation memo, liability calculation template. A lot of the things that we're doing there is we're using your own current accrued compensated absence calculation. I'm assuming that's what you all are doing, but then just adding the columns and adding the things that you need to have for this more likely than not to be used. And then in terms of note disclosures, your summary significant accounting policies, GASB 101 restatement, and long-term liability disclosure templates. And so as we wrap up here, with our time, here are examples of some of those tools that I mentioned. On the left is an implementation questionnaire we send out to our team. On the top right is a snippet from our implementation memo talking about the salary-related payments and how you do recognize in your liability. The bottom right is an example from a PowerPoint presentation where we pulled out all of the different leave types for a certain client, and we talked through and showed them the leave types that we found that were applicable to their government, along with recognition criteria. Top left is the example of our compensated absences summary tool, and bottom right is an example of our liability calculation. And so with that, if you all would like to talk to myself or Scott about how we can assist with implementation, we would be happy to do that. We won't be sharing the polling results for this one, but we have yes, no, maybe in the future, not a 101, but we want to talk to you all about something else. How that works is it's a 30-minute call where we ask you some questions about your leave types. We answer some questions for you based off of your facts and circumstances, and help you to understand, are you on the right path? Is there any way that the advisory team can assist to getting you there to a smooth 6:30 or 9:30 implementation? We'll give you a minute to get those done, and it'll go through some of the questions. Just move over to the questions slide as we. Okay. Scott, are there any that so are the slides be available? Yes. The slides we will send out a post webinar email. In addition, in about a week, you'll find it on the Cherry Becker website. Thank you, Charles. Yes, I will be presenting at the Virginia GFOA conference in Wilmington, digging in more to the 4 phases of implementation, kind of touching on some of that podcast material. God, do you see any questions that you want to answer? We'll be here for the next 5 minutes, kind of going through these, trying to see what questions we can answer. Oh, one of the questions is from Pernakubo. For that organization, it appears that using assumption B, which is last in, first out of annual usage, will get me a smaller liability of my sick leave. Generally, that is probably correct. That if you use last in, first out as your assumption, not you, then what that's saying is the leave used in that subsequent year, some of that's going to come from leave that is not already in your balance. That is not a reason to pick LIFO, right? We shouldn't be picking things just to get the lower balance, but the effect of picking that approach would likely be a smaller balance.
Here's one, Denny. If holiday leave can be floated for future use, we do need to consider it, correct? Now, I only know from my own personal experience what floating holidays are at Cherry Becker. They don't tend to accumulate. And maybe other governments do have it where you can have a holiday that you can accumulate and use next year. Yeah, I think you would treat that just like you would paid time off. But if it doesn't accumulate, if it's not something that you can roll forward to next year, then you would not recognize it.
So say you're a June 30 year end and you decide to work for St. Patrick's Day, assuming that that's the day you're giving off. And I'm going to use it in for an extra day in Thanksgiving. Technically, you've earned that 8 hours of leave at June 30. And it would be, like Scott said, treated like PTO. What I would question there is how often is that happening within your government and how many hours you're actually talking about? And is it ever going to be a material part of your accrued compensated absence liability calculation?
Here's another one for you, Danny. I'm curious to see what you'd say. If you have a $1 million liability in total, and your determination is that 51% of your time will get used, thus it is more likely than not to be used, do you just accrue the 1 million liability, or would you accrue the 510,000?
So I saw that and I read it. I think that the saying that I have a $1 million liability makes it seem like you've already done the recognition and measurement calculation. You would be applying the 51% more likely than not to whatever your total leave balance is, and then applying that to a rate. And so I wasn't sure if I totally understood that question. If it was leave balance, is that what you're saying, Scott, you think?
Yeah, well, typically you are applying the likelihood to the hours before you're applying a rate and getting a dollar amount. I agree. I wasn't sure about that, but if you do the reverse where you're calculating the total dollar amount of your leave, maybe you're doing that first because you want to see if it's material, and then you determine that, well, you only 51%, and assuming that 51% is representative of the entire population. I tend to think that it's more nuanced than that, but I think you can do that with certain organizations. That probably makes sense that you would only be accruing the part that is more likely than not to be paid out, which would be the 51%.
Yeah, I would have. That's what I would have said the 510 if all the other factors were right. Let's see. Someone said a lot of governments allow 24 hours of holiday time to roll. I just want to make sure that if it's floating holiday and it's those facts and circumstances that you're just holding it all and you're going to use it in the second half of the year, then I agree to that would be something to factor and consider. And that's the whole thing. There's every deal under the roof you can find if you work with enough governments. And so thank you again. It looks like we're at our hour. We'll be respectful of your time. Thank you for your time today. Hope to continue to connect with you all. Either Scott or I are going to be presenting in a lot of our larger Cherry Becker markets. It's kind of conference season between now and July. And so hopefully we see you out there. please say hello if we do run into you all. And in the meantime, if you need us, this is our day job to help out our government clients as well as other governments across the country. So happy to answer any question that you have. Thank you.